Good day, this is Graham Bibby here. It's the 21st of June 2013, and I really thought I had to talk to you about how Tony Robbins helped me really improve my already successful investment management returns. You see, I've been in this market over 35 years, and as you know more and more about a market and you start trading everything from orange juice to coffee to the Dow Jones, to the German stock market, to Australia, to currencies and commodities, you lose what Tony has taught me about is focus, the precision of focus. And I can see Tony Robbins is so dynamic. So I was sitting there one day thinking to myself, well, let's get down and let's focus. And then Tony talks about outcome. What do we want the outcome to be? Not how we're going to get the outcome, what do we want it to be? And the outcome for me and for my clients is to limit downside risk in the stock market and leave the upside potential fully there. And what do my clients want? They want hassle-free investment. They don't want to be looking at the stock market every day. And that's what we do. We check the positions of every client's holding every day to see that trend, this is Visa in front of us, is like this, in an upward trend. So, again, Tony, I've studied so much of his videos, I've listened to him a lot, he shared words of wisdom with me, and I can see now where I was going, not wrong, but where I wasn't improving and maximizing the returns. So now what we go for is companies who are outperforming growth-wise. They're beating the market. They're growing in some instances 2 times, 2.5 times the overall growth of the stock market. And then their valuation level is, on a relative basis, in some instances, half of the stock market. And it's a thing called a PEG ratio, which we won't go into today, but it really means this stock is cheap. And then what I use is my 35 years of experience of trading using charts. Now, a chart just puts in picture form the reality of what's happening about a stock or a market. It reflects everything you need to know about the stock market. It's all the fundamentals, because if fundamentally something's good and everyone's buying into it, then the trend should be like this one on Visa, in an upward trend. And look, most people I speak to have not been invested since the last 5 years. And what does that tell you? That tells you most people got out at the bottom of 2009. This stock here has risen from the original breakout point around 80. It's currently 178. It's up about 120% in less than 2 years. I've got to fly you through this because there's only a certain amount of time that we've got, and I'm very conscious of the time. Let's see where we are on that. Oh, we're into 3 minutes in a moment. Apple. Now, great. This was a buy back here in 2009. You can probably find a YouTube video of my recommending it at 100. And then it went from 100 to 200. You should not sell, because if you're in a winning stock, you stay with it. A lot of people would have got out at 120. Then it went from 100 to 300. So, you put in 100,000, you got 300,000, but the trend was still up, and it remained up all the way, almost to sell here, all the way till here. And then you can see a YouTube video from me saying sell this stock at 655. So if you put in 100,000, you got out 655,000. And then what's happened since then? We had one breakaway to the upside here, which was a false breakout. We did go in, we did come out again, because we thought maybe there's a new uptrend starting. It didn't start. Now there's all resistance along this level, and it's in a sideways trading range at best to a downward range. So, we look to get into good stocks, the growth stocks that are going to outperform, but then we want to protect your profits as much as possible. If you were lucky enough to buy this stock in 2009, but you didn't follow my principles, and you had a buy and hold philosophy, okay, you've done very well. 100,000 is now 416,000. However, if you had followed my philosophy, and it's not just about buying in the right areas, it's protection from the downside, you would have come out of this stock with 655,000, which is roughly 249,000 more than if you didn't follow my methodology. So if anyone's listening to this, and you have Tony Robbins' favourite viewers, favourite YouTube watchers, I'm a big fan of his. If you're watching, please email me and I'll send you a free report why buy and hold will not work in these markets. And it hasn't worked for 12 years. So just write this email address down, CEO@Richmond, RICHMONDTH.com. Just send me your email, say you saw the Tony Robbins interview on YouTube, and I will send you a free report on why buy and hold will not work in this environment, and what actually the rich people do and the big financial institutions do with their own money. I've outperformed the stock market over the last 12 months by 50%. From 2002 to 2010, I outperformed the best managed funds by 10 times. My new book is called Master Your Mind, Master Your Money. How to make money in turbulent market conditions. So I welcome you to email me and I will send you this free report. So this is Graham Bibby on the 21st of June 2013 saying thank you for listening to you, and a very big thank you for Tony Robbins for sharing his knowledge and insight with me. Thank you.